All right, Ajay Srivastava joins us. Let's say hello and good morning to him. And he is not wearing a monkey cap, even though it is cold in Delhi.
Good morning. Good morning. Luckily, the market didn't make a monkey of us this year.
Yes, yes, yes. But what happens now? What
Now we all
happens
enjoy
now?
the fruits of our labor, what we have worked so hard in life. I think it's looking good for next year. The newer themes are good. The QIPs are looking wonderfully well positioned. Money is flowing in the equity market nicely. I think it's, for a retail investor, for a non-big institutional investor, I think it's been a good time and should remain so for the next year or so because the market or structure changes are giving us tremendous opportunities. I'm telling you something. This is incredible. It may not be good for many people, may not be good for the economy as well, because the economy is not growing. But I can tell you something. The market structure altering companies are making really hay at this point of time, and they're doing well. So I think that's what I said. If you're a non-nifty investor, I think you're doing fine in the market. If you're a nifty investor, I think you had worries this year. You'll have more worries next year.
Everyone is of the view that small and mid cap is in trouble. Large cap is the store of value. But if I look at the market, the small cap index, even though it was supposed to be frothy and it has reached Humpty Dumpty levels, is at an all-time high, and Nifty has not managed to touch an all-time high.
Yeah, let's be honest. Look at the nifty companies. I think they are one very closely linked to the economy, in which sense that if the economy doesn't grow more than 6, 7, 8%, they can't grow by that method. That's one. Number two, in each of the companies that you see, there is a performance issue in terms of growth. There's a performance in profitability. The managements have been weak in terms of getting into newer areas. They have been sitting on their literally quote unquote backsides trying to think, oh my God, we are big enough, so we will be. So no, that doesn't happen. And that's the beauty of the market. The newer companies will come and challenge you. They'll give you better opportunities. You know, and to be fair and honest, at the end of the day, for a very large company, how many levers do they have to grow significantly in a domestic market only focused companies where the economy is growing at maybe 6, 7%? How many levers do you have to grow disproportionately? You don't have the levers. And therefore, it translates to the stock performance. There's nothing much there out there to give you comfort that they will give you a 20, 25% return easily year on year in the way they are structured today and the economic sector they are in today. And it's fine. You don't need to be in nifty companies, right?
Are you fully invested, and do you plan to stay like that for next couple of quarters?
Oh, certainly. Oh, certainly. In fact, as I keep saying that you need to get somehow or the other, we need to find more money because there are more companies coming up with newer ideas, which we never saw in this economy ever. And therefore, and you need to be part of those newer companies, the newer ideas, the newer setups, and they are going to give you disproportionate returns. So I can see certainly fully invested, more money comes in, more investments at this point of time because the new themes are coming up literally every day. And you got to be part of them. So there's no dearth of opportunities. There is a lot of hula hula about valuation. Yes, there are issues there. But when you have invested in companies which alter the market structure, they rarely give you handsome returns in the long run. And you have seen what happens to new age companies. Against all skepticism, they're given fantastic returns, and it'll continue.
Okay, new age companies, definitely something on your radar. But Ajay, if I had to ask you, um, about 2025, what's the big trade that you're watching out for?
I think the biggest is that healthcare, hospitals, is I think the biggest one that we are looking on the positive side. I think we'll keep adding up to hospitals because India's healthcare scenario from the government spending standpoint is at best stagnant, at worst post pensions and post salaries is negative on the capital. So somebody has to find hospitals and go to hospital. Everybody has to go to hospital, right? So I think hospital is the biggest segment that we are seeing. What we're seeing ourselves also is what we don't want to add to. And I think one thing we don't want to add to now is the capital market related companies. We have enough investment in them. And I think they will take a breather next year in terms of ability to grow for shareholder wealth. Long term, yes, but I think the capital market focused companies will take a breather. Hospital, healthcare will take a much mile. And last point, just follow good quality funds when they take over companies. They deliver fantastic returns. There's a fund which took over, say, if you remember Crompton Consumer Company, and you saw fantastic returns. They took over a pharma company, fantastic. So you don't have to be original about it. You just need to follow the good quality PE funds who take over companies, good quality PE fund who invest in QIPs, and follow the lead. You need to be industry agnostic, but you've got to be very clear in the mind that you've got to follow top quality investors. There are funds out of Eastern Asia, sovereign funds have not done well. So when they invest, we don't invest. That's simple as that. It's quite funny actually, but that's what we do. But there are funds out of America, which when they invest, they create tremendous value, and therefore you need to follow them. So be industry agnostic. I think follow the leader, follow where money is going, and you'll make your money.
You're one of those top quality investors that people should be following. And would you like to share with us? I mean, if you can be, I know you're saying be sector agnostic, etc. But let's take a peek into the next year ahead. Where is it that you are actually looking to put money to work in the markets?
As I told you, hospitals. Number one priority is hospitals. Number two priority is engineering services companies, including engineering companies, is the second priority. Pharma, which is the I'm talking the generic side of pharma, not a CDMO, is the third side of the company. IT, we remain positive on it, given what's happened to rupee dollar, and anything you find which is doing decent exports, and that's where engineering company comes into play. I think they will do tremendously well. You saw rupee dollar at what it is. You're selling literally forward dollar at 87 today, 87 and a half. And that's, your profits are locked in for 2 years thanks to exchange rate. So engineering services, hospitals, newer themes. You just saw a guy coming up with saying diamond rating. Who would ever thought we'd buy a share like that? But that's what it is. The newer themes are coming up. And of course, very select defense names in the private sector. Some companies are doing extremely well with the order book. So you kind of focus yourself, and then, as I said, there is assortment of choices you get today. One we are not buying is real estate. I think that's a sector which we think will underperform next year. Everywhere I go, people have bought 5 properties, 6 properties, and everywhere I go, there is selling going on. People want to now start selling. Wait till the exit rush starts next year for real estate. My guess is real estate will be one sector which you want to stay out of for some time next year. I may be wrong totally. It may overperform, but I guess that sector has issues of overpurchase in the market as when consumers and a lot of resale hitting the market. So that's what sums up the next year life is. Nothing much to do, but limited amounts of stuff to do. So we'll do that. But good part is what we have is doing well.
Recent interesting businesses from the IPO market which has caught your attention, a variety of businesses, like you said, they've gone public. I mean, now you got really interesting businesses which could look small, which would scale up, which are medium, could become large. Any interesting niche or business which has gone public?
I do incredible. We have an investment in a very post-IPO, in a stationery company. It's a very unique company which makes only stationeries. I'm not recommending I cannot be, recommend. I'm just telling you the niche that you see. It's exclusively focused on stationery segment, given our population demographics, school going, college going, and requirement, whether it's craft material required, whether it is, stuff that projects require in India. It's only focused on that. And, it's only one company, so you can Google and see who it is. But that company's done tremendously well. And that's what surprises us always is that we just walked into the company post IPO and has given fantastic returns to us. And look at the segment called stationery. It's just incredible.
Okay, so finding niche businesses at this point of time, that's the view coming in. But what about two-wheelers? You had become a bit more positive on that space. Are you still maintaining that view? And if yes, which stocks?
No, we are out of two-wheelers at this point of time. And as I said to you, it's a market overly competitive. A lot of players sitting in the market. Price competition is intense. I think the flavor is going to, I'm not saying they'll do badly, but I think the opportunity to make alpha money out of a two-wheeler company is, I guess, limited. Sometimes somebody will do well, sometimes some do well. I don't like companies, industries where there's too much of competition, oversupply of products, and limited, and you all focus literally on domestic demand. Now, those 3 things, just like what happened to the paint business, you saw what happened. I think two-wheeler is headed for severely competitive pressures in the next 12 months. And therefore, your ability to make returns out of it is going to be very difficult. Everybody wants to launch EVs, everybody wants to launch premium motorcycles, everybody wants to do everything. So 6 companies competing for a space in a domestic market growing at 6-7%. That's not a good recipe for shareholder wealth. So I think it's out of bound at this point of time. They did well for us. It's out. We exited it. And I don't think we're going back to it in 2025.
There are a lot of these new themes again, Ajay, which are emerging. You've spoken about, let's say, stationery company. That's a niche business. But I'm talking about a general theme. Clean energy, new energy, solar energy, Wind energy. What is happening there?
See, again, how do you make money? I think the way to make, if you invest in a power company, I think you'll make decent returns, but you'll not make extraordinary returns because their ability to give you alpha is limited. The end buyers are government determined, discoms, etc., etc. So there is a lot of optimism on green energy, real energy, but at the end of the day, how do you make returns as an investor in what kind of company? The only way you can make returns, in my view, and I think we've got limited investment, is people who are supplying the stuff to them. Or you sit and take a larger company, like I'm giving an example, like Tata Power, and says, I will hold it for next 10 years because it's going to double its turnover. So even if nothing happens to it, I will make a return of 15, 18%. I think that's one way to reconcile your thoughts. But the fact remains that this sector is so much subject to government policy. Today, there is a tariff barrier with China, so you can set up a plant, and your import of wafers is limited. Tomorrow, tariff barrier changes, your fortune changes. Government is the sole buyer of power and controller in this country by and large. So you're straddling an import policy determined future of the companies. On the other hand, is government who is a buyer doesn't give you very need to be attractive in this segment, and there's just too many people. There's too many people. So we are very confused as to how do you long term make money in this segment, because we are also at the same time saying we will increase coal production, we will increase our normal power generation from coal-fired plants. So it's not a clear-cut outlet that green energy will give you green shareholder returns. I'm not sure the linkage exists. Perhaps it should, or maybe we are not seeing it correctly. But I don't see how to make money on the segment. It's growing, but how does an investor make money out of it?
Okay, and would there be any concerns, Ajay, that you have in terms of what could really put a spoiler to the party? Would it emanate from global markets largely? Would it be some domestic issues? Or is it by and large that the undertone is looking positive unless there's some sort of black swan kind of event?
No, there is a big worry in our mind, and that's what worries us, is the fiscal deficit of the government. I think if this whole helicopter money scheme continues in election after election, it tells you two stories. One, that the economic gains are not adequately spread to the people, therefore you need to give direct money to them, right? That's how you get your votes. And every political party is doing it, so nobody one is guilty of it. The second point is that the more the money goes in helicopter money, the less it's available for capex, less it's available for stuff, and therefore we've already seen government capex going down at this point of time, and in percentage terms, it will go down drastically further. It was 40% growth 2 years back, it became 20%, became 10% this year, possibly negative, and I do not know what the number looks like. So what worries us every day is that what will be the fiscal deficit impact of this helicopter money election after election as it goes out to the market, and what does it do to the government finances? We just told you about what is happening in the health sector. Money is almost gone. Same is happening in defense. If you see, the capex budget of defense is not very large anymore, and therefore a lot of optimism we have with defense companies is getting tempered around it. So one single worry, if you ask me, for the market is the fiscal deficit of the government, and what happens post all this helicopter money, fertilizer subsidy, food subsidy, how much remains for infrastructure growth, and would it keep raiding capital and taxes, if GST increase or tax this thing to keep making the deficit? That's single largest worry. Globally, you could not have been a better place with America and Trump you ever want to be. It's the best place to be globally. But Indian fiscal deficit, that's the only single worry we have, nothing much in the international front.
Ajay, best wishes for 2025. Always a pleasure and wonderful to have you.
Thank you very much. You have a great year.
If you like this video, then like, share and subscribe to ET Now.